Happy Monday, everybody, and welcome to another edition of Weeds Weekly, where I, Kevin Weedmark, just break down what happened this past week with regards to the mortgage industry, real estate space. We're going to talk about what we can have on our radar for this coming week. We're also going to talk about adding value. We always want to be adding value, and we want to remind ourselves that the real estate industry is a people business. So let's just dive into what we had last week. And whoa, we had a lot of labor job information that came down the pipe last week. And I was one that was shouting from the rooftops. I clearly thought that we would get a great indication of what the Fed was going to do at its September 18th Fed funds meeting, what they were going to do with regarding interest rates. But again, look, I think a lot of it, we're still fairly uncertain, although the odds have us that we're only going to be getting a quarter point. So last week, what did we see? Well, number one, we had JOLTS report, job openings. They came in about 400,000 less, a little bit over that, as far as job openings, which means that we have a shrinking labor market. That then was coupled with initial jobless claims, came in a little bit light under forecast. And then we also had non-farm payrolls. They came in about 22,000 less. So overall, it is a clear indicator that the labor market is the Fed's biggest concern. Make no mistake about it. It was for inflation for probably 6 months of this year, and now we've turned over into the labor market, given the lag effect. So that was last week. And the other thing that we saw was we had a lot of traders anticipating a half a point. We then had the Fed speak on Friday, and we were sitting at about a 59% chance that we would get that half point, and it looked like rates were going to be racing lower, 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 and lower, only to have the brakes put on. And right now, as we sit this morning, we're sitting at about a 27, 29% chance that we're going to get that half a point. And a lot of that is due to the wage increases. We saw wage increases go up from a year-over-year basis from a 3.6% to 3.8% from July to August. So if that's moving in the right direction, creates more purchasing power, means that the economy may not be slowing down, means more consumptions of goods, means good GDP, which means that businesses will be hiring even though they're going through this little flux right now. So that is what happened last week. So now as we move into this week, look, we have a very light week as it pertains to data. We do have inflation. Remember, it was only for the first 6 months of the year, I was screaming from the rooftops, inflation data, inflation data, inflation data. That is going to be the most pressing thing that the Fed is going to be looking at. But it's been on a downturn. For the last probably 3 months, we keep seeing inflation coming down at 0.1% every month, month after month after month, from 2.8 to 2.7 to 2.6, and the forecast for this month is 2.6. And really on that front, unless we see a spike in inflation for some crazy reason, the Fed is going to sit tight. Even if we come in right at the numbers and we don't see the continued decrease, we're close enough to the Fed's 2% that they're not going to get all knee-jerky and think that they got to do something with interest rates. We clearly have a quarter point coming into us because of what's going on with that labor market. Now, if we get a huge jump in inflation and we see it jump all the way down, the forecast is for 2.6, but let's say we saw it come in at like 2.3, 2.2, we might get that half a point cut. Just simply because the labor market is such a concern for the Fed right now that I think they might jump on that. The other piece of data I think we really got to look at is initial jobless claims. Giving that labor and jobs is the forefront of what the Fed is most concerned with right now. That jobs report, any initial jobless claim, any data concerning jobs is going to be the Fed's biggest concern. So should that clearly miss the mark, that would be another, strike against how confident the Fed is in jobs in the labor space, and it might call for another 50-50 shot at the September 8th meeting where the Fed comes out and says, hey, we'll give you that half a point. But make no mistake about it, right now in pricing, a quarter point is baked in. The only chance that we have for potentially lower interest rates from here into the election is if we see that labor market come down, or we see the Fed do that half a point, then we will clearly see it. Or otherwise, I think that we are just going to ride this wave where we're just kind of teetering up and down. We'll see some volatility, make no mistake about it. We'll see some movement in the marketplace, but we're not going to be getting big swings. It's not like interest rates are going to come down another quarter point from where they are right now, unless we get that half a point cut. So the other couple things I want to touch on really quick is number one is that we always need, to be adding value to our clients. That is a big thing that we as professionals in this industry need to be doing for our clients. And when I say adding value, look, I've been in this industry for a long time, and something that I pride myself on is being a great resource to your clients, especially if you want to have a long and prosperous career. You need to be more than just somebody that they call for any housing needs that they have. You need to become a resource if they need a landscaper, if they need for a painter around the house, a general contractor, any need that they may have. You should be that absolute resource, because at the end of the day, it's all about touches. It's all about being the person that they want to pick up and give a call to, because they're a great resource, somebody that can help them save time and money. And then when you're actually giving touches, there's so many ways today, right? There's social media, there's mail, there's you can do events, you can do happy hours. My favorite is the old school, pick up the phone and have a conversation with a client, even if it's a scheduled call. You know a lot about them. You know what's going on with their kids. Talking to them about maybe sports. Talking to them about their kids' environment. Talking to them about upcoming events for the month. Talk to them about something that they may have an interest to from a travel perspective. And the biggest thing and the biggest way that you could touch somebody right now, if you want to be the biggest hero, is saving money. And right now, if you had a purchase for a client in the months of October, November, and early December of last year, you had a closing during that time, you should 100% be picking up the phone, because it can be another touch for you, and advocating to your client to save money. Right now, rates back then were running anywhere from 7.5% to 8.5%. We're running now from 6.25% to 7.25%. They could clearly save at least a half a point, if not more, with no closing costs. That's going to add directly to their bottom line on a monthly basis, and it's going to save them thousands upon thousands of dollars over the life of that loan. So you want to make sure that you're making those touches, right? And then lastly, the other thing we want to talk about is this NAR settlement. And we talk about it, I see a lot of angst. I see a lot of people giving a lot of negativity around it and stuff like that. But at the end of the day, the best thing about NAR is that it's going to push us to just be more transparent. It's actually a great thing for the industry, right? It's going to create, which is what we are client focused, right? Your client is making the biggest purchase that 99% of our clients are making the biggest purchase that they're ever going to make in their life. Not only is it a financial, just crazy decision, it's an emotional roller coaster. And we as professionals need to be there for our clients. We're not just order takers. We are people that are there for them every step of the way. Not only are we professionals in the fact that we know all of our market data, but we also now, what NAR is going to do, it's going to push us to have more transparency. It's going to create more discussions. It's going to create more dialogue between you and your potential buyers, between you and your potential sellers. Overall, I think it's going to be a great thing for the industry. Now, am I, like you, happy that the government shoves it down our throat? No. I think the government involved in any industry is a negative. I think everything that they touch, it's for the worst. However, in this case, anything that's going to create more dialogue, more opportunity for you to have actual contact with your clients is an absolute great thing. So always remember that, look, we need to be on the side of our clients. We need to be positive about this change. It's an opportunity for us to have more touches, to be more involved in that decision making, and to actually be an advocate for helping them save money, navigate the biggest financial and the biggest emotional stress that they're going to have in their life. All right, as you can see, the rates have dropped. Once again, we're looking at lows that we haven't seen probably in well over 52 weeks. So within a year, we are looking at substantial lows in the marketplace. So if you have a scenario you need me to run for a client, or you have a client that's looking to make a purchase, the best thing that they can do is start talking to that mortgage professional sooner rather than later. I'm always available, love a phone call. And I love to have honest, transparent conversations with clients, our clients, your clients, my clients. And the biggest objective, as I always say, is to help them save money, whether it be in the interest rate or whether it be in the cost. All right, everybody, have a great week. You need anything, please do not hesitate to give me a call. And as always, happy selling out there. Talk to you soon. Cheers.